Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome, everybody, to another edition of Zacks Top Stock Picks. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks Investment Research. And we've got two great picks here. We got mine, which is great, and then we got Dan's coming up after mine. It's great, too. All right, let's just jump right into it. As you can see, my pick is MGM, and that's MGM Resorts International, and it's a Zacks rank 3 with a B for value and a C for growth. Here's the important thing, and we got to be timely on this one. Earnings report is tonight, Monday, May the 2nd, after the close. So let's just take a look at what the number is. We're expecting 2.81 billion on top and a loss of 5 cents on bottom. That's what I'm seeing from a service provider. Let's go ahead and just run through, why I like this name, and we'll just do our general thing. So first we look at our surprise history. A beat, a really big beat, a monster beat, and a gigantic beat. Boy, that's one of those things where it's good, it's bigger, it's even bigger, and then it's really huge here at the end, So a great pattern here, a great setup of beating the number and doing it consistently. What's been happening with the estimates, you might ask? Well, inching the wrong way and then the right way here. So a penny wrong, a penny up inside of the last couple weeks here for this quarter. For next quarter, you can see it bounced a little bit as well, but we're generally in the right direction. For the full year, 51 cents moves up to 54 cents, and then next year 66 to 88. So that's those are good numbers, good directional type spins there. If we take a look at the top line, we can see there is good growth expected this year. It's 28%, and next year just a little shy of double digits there at 10%. So the valuation, boy oh boy, swallow a pill here. 76 times forward earnings, and that's just because earnings have been depressed coming out of the pandemic and whatnot. So there's a little bit of difficulty there. The price to book is a 1.75, so not the best, but not the worst. We see top line growth has been awesome, 104%, and operating margin still negative right now, so not liking that. Let's flip to the chart and then give the bigger story here. So pandemic crash, recovery, and the idea is like, okay, these things aren't going to go bankrupt, which was possibly the thought around here, and then kind of stabilization. The thing that we've seen a lot here, and especially in this time zone, okay, so with the quarter that's going to be reported, the January, February, March, we saw leisure travel was exceptionally strong. Foot traffic in the Las Vegas area, on the Strip and everything was exceptionally strong. So there's lots of indications that, the gambling revenues are going to be up and they're going to drive this stock a lot higher. So tonight there's earnings for this company, and then I think there's several other casino operators poised to report. Boyd, BYD, they reported not too long ago, and if I'm really clever, which I think I am. I think I can look up those numbers right here. Boyd had a 19-cent beat on top and on bottom as well. So that's pretty good for them. But that's just an early indicator that casino operators doing a little bit better than expected. So that's why I like this stock for the week. It's MGM. It's $41 right about now. We'll see where it ends up. So now I'm going to pass this over to my colleague, Dan, and he has a whale of a stock. Go, take it away, Dan.
Thanks, Brian. Today I'm going to be pitching SeaWorld. By the way, I'm Daniel LeBeau, stock strategist here at Zacks. SeaWorld is an unlikely candidate for this for this big bid going into the recovery of our economy. The world is itching to get outside and get back into some sense of normality. And SeaWorld's best in class amusement parks have really taken off ever since the pandemic began. So the stock is up almost 1,000% from its pandemic lows, and is almost double where it was trading at prior to the pandemic's hold, which took place a little over 2 years ago now. The stock is looking more attractive than ever, trading around $67 a share, and we're in this bullish uptrend that we've seen since the pandemic lows, as this company's management team, driven by their latest CEO, Mr. Swanson, and the company has gotten out of this blackfish downspend that they've had since 2013. They lost over 70% of their value from Blackfish's, kind of tabooed SeaWorld experience back in 2013. I'm sure you all have seen that movie. It's pretty devastating as far as what SeaWorld had done to their to their orcas, and kind of the captivity involved and mental stress involved with these animals. So the company has really transitioned from this orca focused amusement park, and they've built out their 12 separate theme parks across the US, and really focused on the operations within each park. It is showing within the company's investment options as well as their outcome in recent quarters. Their latest quarters have been record quarters, and this is looking even into the past before this whole blackfish taboo. And like I said, the company is really emerging from this taboo with stronger operations than ever. USA Today announced that this best-in-class park services also had the best amusement park of the year in 2021, along with the best roller coaster and best water park. So they're really being recognized for their, like I said, best-in-class services for this type of amusement. So let's take a look at the charts and take a look at the opportunity here. This is SeaWorld Entertainment on TradingView.com, ticker SEAS. You can see this is the chart over the last 3 years or so, and this company came down into effectively bankruptcy levels down here at less than $10 a share. That would be a market cap of less than $1 billion. This is, like I said, bankruptcy levels that the market was pricing in here, but we are booming off of that. You can see this uptrend here since roughly, it's pretty much since the beginning of this, or the end of this pandemic sell-off. We've had this bullish run that has held in this Fibonacci uptrend, this Fibonacci channel that I've drawn out here from the October highs, October 2020 lows, to the highs it hit it was about a week later. And it's really held within that, with the 200-day moving average working as a support here, and this 50-day kind of working as a market guide for where this thing is headed next. You can see that SEAS is kind of oscillated up and down around it, but with this bullish uptrend, I have seen no reason for this, currently below market value as far as valuation goes, trading at a forward PE of less than 16. This stock has no reason to stop here, with momentum only at its tail and earnings coming up on Wednesday that could drive a further bid in this stock. You can see its prior earnings have really confirmed the bullishness in this position, and despite market volatility, the stock has remained buoyant throughout 2022. You can see it is up over 10% for the year. Comparing this to the S&P 500, you see a massive alpha here of close to 25%. And this is the kind of alpha we're looking for in this quality-driven environment where investors are searching for those best-in-class names, and SeaWorld has proven to be one of those in this reopening space. Like I said, SeaWorld is an unlikely bull, but the narrative behind this, under the radar, so to speak, amusement park is really compelling, with huge growth potential and growth proven out of 2021's results, outpacing all of their competitors and looking for price targets around $90+ a share. We're trading under 70 today, giving you a nice 35+% upside from where we're at. And with this bullish uptrend still in place, there's no better reason to pull the trigger than than this reopening that we're just entering, with the mask mandate for traveling just being taken off the table. Now is the time to invest in this reopening play. So thanks for watching, guys. Look forward to speaking to you guys next time.